Gold last week has given a good bounce back towards the end of the week. Yes, despite trading with moderate bearishness throughout the week, we have seen a very strong recovery, specifically with Chairman Powell's comments, and yes, specifically with the hopes of rate cut, we have seen gold bouncing back towards the end of the week. Yes, it has started the new week also on a slight bearish note. So, what to expect from gold in the current week? Where to enter, where to exit, how to profit. We are going to see here with the help of charts and indicators. This is a weekly forecast. I do share my twice a day updates for major global markets and commodities. Subscribe, press the bell icon to get the notifications. Do like, share, and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. Towards the end of the update, I'll be sharing the trading levels, so watch till the end. First, let's focus on the weekly charts here. See what's happening on the weekly charts. Gold for the last multiple weeks and months is trading with little swings here. Every time it shows a drop, it follows with a bounce back and it is following a narrowing triangle. Higher lows are seen, lower highs are seen. That is the first observation here. It is yet to break beyond the record levels which it has created, that is 3500, and the next milestone at 3440, 3450, the crucial numbers here. What is happening since then? See, it is waited for the 20 period moving average to climb up. Now, there could be one possibility when gold would like to kiss 20 period. Even if it is bullish, it may try to kiss 20 period before bouncing back. That one possibility exists strong. That is the first observation. Next, if you look at the move here, see bigger slide, retracement, then couple of pullbacks, then retracement, one single pullback, then a retracement. Now, in general, when you see such candle and a pullback, it follows with a good bearish candle. In general, when the things are as per trend, we expect that first red candle a pullback, so second candle a follow-up candle has to be further bearish. In my understanding and observation of the chart, it happens like this. So what we can expect, this time the candle could be further bigger. There is a possibility, but where to confirm that it is turning bearish? See, first hurdle which gold has to trade below is 3340, 3320 zone. This is going to be the most critical zone here on the downside. As and how gold prices trades below 3340, we can expect slight bearishness, and once it trades below 3320, then we can confirm this is a definitive bearish move here, where the prices are going to trade further lower. Where it is going to head towards, we can in fact expect it to move towards 60 to 80 levels here, which is a very crucial number for gold to break below, and below that 60 to 50 should arrive. Also notice drop here. This is a retracement channel. Once it comes out of the channel, this will pave the way for the next move here in gold prices. So this is one observation. Next, what will happen if it continues with the pullback? It continues with the euphoria created here towards the end of the last week. If it continues and trades beyond 3410, 3412 zone, we can say that now there is a strong possibility of a movement towards 3440, 3450 with a minor resistance in between 3425, 26 levels. So yes, if and only if it trades beyond 3410, 3412 and breaches 3425, 26, you can expect the next targets are going to be towards 3440, 3450, and if it breaches 3450, it is going to deliver a massive breakout move here. Till the time it stays below 3440, 50, you should not be treating it as a long-term breakout. Stochastic bearish here. The MACD on the weekly charts has crossed over. This is a definitive bearish move. See, it was trading at peak, and since then consistently we have seen a down move in MACD, though the prices have not moved according to MACD, but yes, MACD definitely has cooled down, and it has got lot much of room available on the downside still. Yes, RSI is also trading bearish here. Let's look at the daily. Now on the daily charts also, similar observation, consistently higher lows, lower highs here. It is a narrowing triangle. Whenever it delivers, it is going to be a breakout move, either which ways. And you have to wait for such breakout. As long as it stays between this triangle, it's neither bearish nor bullish, which means either it has to trade beyond 3440, 50 or to trade below 3280, 3250 levels here. Till the time gold prices stays in the zone, it is just consolidation. Moving averages after a long time have converged here but yet not crossed over. This is another observation. There should be a crossover. Remember, gold on the daily charts has not shown any crossover in last 1 year. Yes, this was the last time. In last October to December, we have seen a crossover, and since then it has just stayed bullish here. So possibility of a crossover exists, which means there is an increasing possibility of a sell-off. But it is, remember, the factors right now in the markets are not supportive for such a drop. You have to be watchful. Now look at the daily charts also. See, it is when you look at the last few candles, this is how it is forming the flag. This is a bullish flag. You can see this. After the rise here, it is trading in this bearish channel. It has to come out of this, which means first the gold price has to trade below 3300, then 3280. If it stays below these two levels, you can say this is a bearish breakout. Else, in general, when you look at the chart here, so mixed indication, because in general when you see such rise, then a flag, so it gives you a breakout in the same direction. So we have to wait for it to confirm a breakout. Stochastic rising, the MACD has crossed over here. Right from the neutral line, we have seen a crossover, which is a supportive sign for further rise. So when you look at these two and this, it appears there is a lot much of a move available here. RSI placed comfortably. Coming to 4 on the 4 hour charts, there is a crossover on the buy side. Look at the move, rise, retracement, then bigger rise. It could possibly follow the channel here, and this confirms that now first critical zone for gold on the downside lies at 3340, 3320 levels. And once it trades below 3340, 3320, what to be expected here? We can say there will be a move which is going to take the prices below 3300. And what will happen once it trades below 3300? This will confirm the breakdown here. Till the time it respects the zone, you should not be treating this as bearish. Stochastic looking down. The MACD has seen a good move. It is trying to converge. It is not yet crossed over. The RSI is trading with moderate bearishness here. Coming to the monthly, focusing on the monthly charts alone, I have several times shared in my all the previous updates that gold prices are trading with extreme bullishness now, and these are extremely overbought levels. Though yes, the theory is this is gold, it is, once it takes the direction, I think it is difficult to get the pullback, to see the pullback. And this is a long term breakout which it is shown. See this consolidation, then first rise, consolidation or retracement, then this breakout. But every breakout has a certain limitation. It is not that it is just going to rise endlessly. It has to end somewhere. Now, when you look at the charts, what has happened? See, I have been remaining bearish in gold since long, and I'll be sticking to it, whatever be the reason, whatever be the case, rather. I'll be expecting a pullback, though right now the situations are not so favorable. Look at the candles here. Look at the stronger moves what we had seen in gold. What has happened since then? It is staying in range. For the last 4 months, we have not seen a move in gold prices. Every time it shows a rise, it is followed with a pullback. Now, when you look at the last few candles, diminishing bullishness and then first red candle has appeared. So ideally, also look at what it has done. Beautifully, lower highs are done. Lower highs suggest that ideally it has to deliver a red candle this time. Now, only we are left with last 5 to 6 sessions here in this month, or rather, I'll say 5 sessions this month. And in 5 sessions, for gold to cover such a good move appears difficult. It requires a lot much of push or a news based movement on the downside for it to cover this much ground. And hence, the current month is getting crucial here, because see, this is lower highs, higher lows. This is again consolidation, and a breakout in the coming month is again going to remain critical, which I do not expect. Look at the divergence of the price from the 20 period, which is right now sitting at 2800 levels, too far levels here. Stochastic trying to cool down. The MACD has seen enough bullishness here. Look at the MACD and see, when you look at the weekly charts here also, you can just see at this point itself I have told you that these are extreme levels. Gold prices has to retrace, and that is what has happened. We have seen gold price trading in range for weeks now. Now when you look at the monthly charts, Now, if you apply the same thing here, very simple, nothing difficult or nothing different from what we had seen on the weekly charts. Rise, pullback, rise, retracement, 2 year cycle here, 2 year cycle here as well. This has seen the extremes here. Possibly it has to sooner start converging. It has not shown any signs of bearishness in last 2 to 3 years. We have to wait for a good pullback. We have to wait for a good bearish month, and this could be the closer of the current candle, which is going to remain very, very important. Any drop below 3280 level will confirm the bearishness in the coming month. You have to keep a note of this. So now we have seen the charts and indicators. Time for me to give you the trading levels. And before I give you the trading levels, if you are also willing to learn this art of trading, you should join my mentorship batch. 34th batch starts 1st of September. Limited seats are available. Register yourself now itself. Reach out to me via Telegram or email for your queries. Those looking forward to just trade as per the signals can be part of my signals channel on Telegram. Again, reach out to me for queries. And if you are just looking forward to a trusted partner which offers you swift-free account, lowest spreads, no hidden charges, easier transactions, and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now on the weekly charts, where you should initiate a buy, I will recommend, see, 33.78.80, which I have recommended last week as a good resistance. It is again going to remain a very good resistance for the week. And then, in fact, despite, even if it trades beyond 33.78.80, be careful of 33.88 now. And if this is taken, stay bullish for 34.02, and if this is taken, then 34.10, 34.12. Now see how proximate the resistances are, which means there are greater hurdles on the downside, on the upside here. But once it trades beyond 34.10, 12, you can say bulls should try to take over. Then also 34.40, 34.50. Two milestones for gold to break beyond. Once it trades beyond 34.50, we can say now the bulls are back. Stay bullish for 34.75, 3500. Any move beyond 3500 is a sign of rally, is a sign of bullishness, is a sign that gold prices are going to head higher. How high? In fact, the sky is the limit beyond 3500. I am not in favor of this. Yes, I will not remain in favor of such a rise. 3500, the levels which we had seen, I think it is going to be difficult for gold to break it soon. But yes, these are markets. My expectations and markets movement are two different things. I am I'm not in favor of a rise in gold prices for the entire year, but yes, already we have seen 3500. So again, markets and expectations are two different things. We have to wait for it to clearly give a breakout. Now on the downside, you can sell here at 3360. Expect 33.50, 52, very good support. 33, 36, 38, the next. And if this is taken, then 33.20 levels. Once it breaks 33.20 levels, now you can just stay short here. What you will look at, 3300 first, 32.80, 84, the next here. If at all gold trades below 32.80, 84, stay bearish. We are looking forward to 32.50 and then 3200 levels very, very soon. It might take some time, not necessarily, but where it closes the week is going to set the path for the next move in gold prices in the month of September. Take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live market updates. And join the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading week ahead. And do not miss to watch the twice a day updates. Thank you.